You are listening to chartingwealth.com for Friday, the 23rd of September, 2016. Let's jump right into the market and see what we see. Well, we told you to be careful of the Fed meeting. The Fed meeting took place, and what happened? As we look at our charts, we see a large green up candle for the two-day candle ending on the 21st. That was Wednesday of this current week. And then Thursday, the first day of the two-day candle. That candle will wrap up on Friday afternoon, but the first day is a huge surging up candle, about 2.5, maybe 3 times the size of the two-day candle on the 21st. Lots of furious up movement, actually going all the way up to just about where the market started going down on the two-day candle on the 9th of September. So we are continuing to watch this action. We don't yet have a crossover going up on the MACD, but it does look like it's getting close on the two-day chart. The derivative oscillator is still in the negative, so we don't have a confirmed crossing over yet. We told you to be careful as to particularly any down plays that you were into on Wednesday, and the market did soar after what the market received as good news from the Fed, which of course means bad news for the economy. Isn't that crazy? All right, let's look at the 4-hour chart. It also has passed through and penetrated not only the two-day chart, but also, of course, the weekly chart now. Looks like the market hit its high in the morning and then sort of pegged that again in the afternoon. Is that where this joy and exuberance is going to stop? Well, we'll just have to see what happens on Friday. We don't have any entry points. We still have a major pullback underway. Again, if the market rolls back over and starts going down, remember the weekly chart's still in a confirmed down move. We still have a confirmed down move in the two-day chart, although we're above both the trend lines. So let's just pay attention and see what happens. This may be a strong enough move that it pulls the two-day chart and the weekly chart over. We'll just have to see. Sometimes it's not simply a pullback, it's a reversal. What's the difference? A pullback on the 4-hour chart goes in the opposite direction of the two-day chart, but it becomes a reversal when it's strong enough on the 4-hour chart that it actually pulls the two-day chart in the same direction. That's the difference in the two. All right, now let's quickly keep moving through our charts. We're going to go from IYY, which is a total market, to SPY, which is Standard & Poor's 500. Looks very similar. Derivative oscillator losing energy, getting closer to a crossover going up on the MACD, but still a good bit of distance. Huge rocketing up over the course of the day. It looks like, oh gosh, the first half of the two-day candle that ended on the 22nd is maybe 3.5 times the size of the candle back on the 21st. So lots of exuberance and up movement in the market. Also closed above the weekly trend line as well as way above the two-day trend line, the old one. When do we draw new trend lines? Well, we don't draw new trend lines going in a different direction until there's an actual confirmed crossover, which has not happened yet. All right, now let's look at the 4-hour chart on the S&P 500. Again, lots of up movement in the morning, paralleled by the same up movement in the afternoon. Is that going to be a ceiling? We don't know. Let's pay attention to what happens on Friday. All right, let's go back to the two-day chart, and let's take a look at the Qs. The Qs was up 0.80%. That was the biggest gain in the three indexes for the day. IYY was up 0.70, SPY, Standard & Poor's 500, 0.63, and the Qs, that is the NASDAQ 100, up 0.80, flying up even outside the bounds of the Bollinger Bands, way up. Have not yet crossed over going up on the two-day chart, but getting close to it. If you recall, we told you from the broadcast over the weekend that the weekly chart was still in a confirmed up move on and it was the only of our three charts that was in a confirmed up move. The S&P 500 and the NASDAQ 100, the S&P 500 and the total market were in confirmed down moves on the weekly chart. So lots of strong up movement, still not strong enough to cross over going up yet, but might be getting close to it. So continue to watch on that. What do we see going on the 4-hour chart? Well, your 4-hour chart had crossed over back on the 15th going up and was still headed that way. So again, no buy-in points at this point. All right. Now, and again, remember, we're not like the guys on Wall Street. We don't have to trade. We wait until we can find a trend that we can follow as safely as possible. You want to know more about that? You need to go to our website, chartingwealth.com, sign up for our newsletter, and guess what you'll get with that? You will get a link to our How to Read a Stock Chart video, which is exactly what you need to start learning about what it is we do here every day as we chart these markets. If you can learn to read a stock chart, it is truly your road to riches. We recommend you listen to that 15-minute video. Go and listen to some of our other training videos, lots of good ones there, and start following us every day. Plus our weekly review and forecast. It comes out over the weekend, every weekend. What do we do for you? Well, we help you follow the markets. You can open at any of the online brokers your own virtual trading account, and you can start practicing every day. Once you get good at it and you can really read these charts, then and only then can you take your own money and make your own decisions. We are not a stock calling service. We do not give advice on what you should do with your money. You do not pay us for that. So what do we have going on with gold? Gold was in a confirmed down move until it started. Well, it still hasn't flipped over yet, but it's getting awfully close. Derivative oscillator's already gone into the positive. 2 candles over the last 3 days of up movement. Again, the candle over the course of the 22nd, Thursday, big up candle. Still not enough to flip over the MACD, so continue to watch that. We have broken, of course, the trend line. That happened back on the 21st on gold. And let's take a look at what's going on the 4-hour candle. Again, our 4-hour chart continues to just, again, be prescient. You could just trade this chart and do so well. We like it when gold is actually moving. Our 4-hour chart is your everything chart. So again, pay attention to that. That is where we are at the end of the day. We hope that you've signed up for the newsletter. If you have any questions, problems, concerns, please go to the website, chartingwealth.com. Write us. We always love to hear from you. You want to help us out, a little payback, all we ask. Go to iTunes, subscribe to our podcast, give us a 5-star rating. We love to be in the top 5 of the stock market podcasts in the world. Help us do that. Also, go to YouTube and subscribe to our daily review. Thanks so much. And again, that's Charting Wealth. Chartingwealth.com is the website. God bless. Stick with us every day. 10 minutes is all we ask.